Welcome, welcome. Yo, Jack, can you hear me? You're first, Jack. Jesus. Stream is starting in 3 minutes, man. Can you hear me? Nice. Cool, yeah, stream's gonna start in 2 minutes. We're gonna break down gold. Obviously, we had a new week, so it should be interesting. Hey, bougie. We're all here. This is all I need. Just 2 people. This is perfect. I need to. Yeah. The breakdown is supposed to be a sad thing. It's supposed to be emotional, you know. So that's why the emoji is reflective of, you know, gold breaking down. That's what I really wanted for my kind of like a stream profile picture, but man, I couldn't get that, unfortunately. I tried to get AI to generate it, but it just didn't know what I was looking for. But yeah, I'll continue to work on that. Maybe we'll get a better profile pic one day. Yeah, pretty mid weekend, Jack. I'm not gonna lie. Not very much happened. Back to the charts, which is more exciting than anything, to be honest. Yo, what's up, everyone? Yeah, man, I take like words quite literally. So when it's like gold breakdown, the first thing that kind of popped into my mind was like gold breaking down and crying. So I tried to get like the profile picture. No, so the stream picture was supposed to be like gold in like a very sad New York rain setting. So I tried. Okay, cool. So welcome to the streams, everyone. Obviously, so today is the 24th. Streams are going to start at 11 p.m. London time from now on. I realized that Wix is streaming slightly later, right? So about 2 hours from now. So I want to give everybody enough time to kind of have this breakdown and then go and like kind of chill out, you know, do their own analysis, or, you know, have a think about the analysis before jumping onto Wix's stuff. Obviously, Sunday night it's only Wix's table, right? But you know, Wix streams Tuesday to Thursday night, so 4 days, Monday night to Tuesday to Thursday night, all for free on YouTube. So, and for everyone publicly. So, just giving a little bit more time for him, and also it kind of helps. I think the chart doesn't start moving, you know, at this time, even though there's like low amounts of volume, but the chart is like completely static at the moment. So it's easier to kind of do the breakdown at a very specific price point. So let's get straight into it, right? So we had a weekly closure. Today is Monday, well, still Sunday, but it will be Monday in about an hour for the Londoners. But let's obviously start breaking the price down from the monthly, right? So what is monthly doing, all right? So where are we currently on the monthly chart? So currently price is sitting at this kind of zone around here at the top of this range. I would say, like, you know, you're kind of breaking into this range. Let's use basic levels. Yeah, so price last month closed bearish, respecting 1936.9, right? So at any given point, because, you know, price closed bearish and then bullish back into this range between 1936 and 1990, so at any given point this could be the celery to come back up. All right, so in terms of, you know, the monthly chart, we're bearish because the previous monthly was bearish, right? We can understand that, you know, you're closing respecting the overall range at 1990 around here, right? But at the same time, you know, we're expecting that top wick for the monthly, because that monthly candle, 30 days, and it had no top wick, right? So we're expecting a top wick for that candle before starting to drive down. And if that does happen, right, it will be moving from, you know, 24 to about 67, and you know, that's a massive range that we can start trading within. So So yeah, so just bear in mind that, you know, if price wants to drive down, it needs to grab liquidity, right? If it grabs liquidity, it will likely grab it above this monthly candle high, so about 1966 to 1989 or even above, right? So once you grab that liquidity, we can expect price to start driving down. And then once that happens, you know, sure, we'll be very, very bearish. Everything will be aligned and we'll take ourselves coming down. But until that happens, you know, we're still expecting that monthly top wick. So just kind of bearing that in mind as we take our trades for the rest of this month, which has, is this the last trading week? This is the last trading week. So let's move on to the weekly, right? So the weekly closed bullish, right? So the bullish closure was respecting where I would put it at around these levels here. So, you know, I've got these, you know, support and rejections, support and resistance there. Got some massive rejection there as well. Yeah, rejection here, right? So I would say we're in a range between here and probably somewhere around these areas, right? So this is just a general range that I would say we're in. Obviously, this is not the clearest range because the daily candle, you know, there's a lot of movement and there's a lot of like smaller movements in between, but generally you have, you know, some rejections here, you have some support being formed here, some resistance there, right? Some resistance here. You have all these wicks here, they're tapping these levels before going back up. Some, you know, support, like blah blah blah, right? So essentially, this is my range that I'm in. But I'm also expecting, right, if price wants to, you know, break back up. 2 weeks ago, so on this weekly candle, we closed bullish, respecting 1918, right? And every time that we've closed bullish, respecting 1918, we've come down to grab liquidity before driving up. So if we're expecting the monthly top wick, right, to start, you know, being created, where can we get our buys to get to that area, right? Because we need that liquidity before overall price wants to drive down over the next couple months. So, you know, we're mirroring these sorts of pushes, right? You know, you've come up, right? You started respecting, you've come down, grabbing liquidity to go up, break the monthly highs potentially at these sorts of areas, right? And then start driving down. So we're looking for buys last time, which is kind of mirroring what happened last time when price respected 1918, right? So specifically, we've got somewhere like this. So we're looking at these pushes. We're looking at these pushes here as well, right? And we broke this down last time as well, and we're looking at these pushes here, right, all the way down to here. So these are the main areas I would say we're looking at, because price respected this level. Obviously, price respected a higher level here, but it grabbed liquidity all the way down here before it was able to come all the way up, right? So I would say buys around, you know, on the weekly chart, right, 1903 to about 1890 sorts of area. Obviously, this is a massive range, right? That range is like 110 pips, so we can't be just saying, okay, yes, just buy within that area, right? So it'll be more specific once we drop down to the daily and the 4 hour, but that's what we're expecting, right? And that's in line. The weekly currently, our buys are in line with the monthly. And then if you look at where price closed this week, right, this week price closed bullish, massive top wick, right, breaking these highs, breaking, I think, current monthly highs, so September's highs, but respecting this, right? So you're respecting 1927, and I'd say if you move this slightly up, you're respecting these areas. So this is where we had that line before. So if you're respecting these areas, what can you expect as well? Like in the shorter term, you're respecting here, so you could be mirroring, you know, pushes like these, or, you know, pushes like these, right? So what happened, you know, in these areas? Once price respected here, right, it started pushing down. There was not much of a top wick. The previous weekly here had no top wick, but I'm also conscious that price drove from here, right? So price came down to about 1850 before driving all the way back up to here to start coming down, or also grabbing liquidity before, you know, driving all the way down, right? So because price has not done that yet, this is less of an accurate mirror than this would be, I would say. And in terms of weekly top wicks, I'm looking at, you know, areas between, you know, this wick here and this wick here. So between 49 and 59 on the weekly. And once that happens, sure, we'll get into our sells, and this level matches up with quite a few areas, right? So this specifically, we're looking at this, we're looking at these here, right? We're looking at this as well. Let's just extend this all the way to here, right? So we're looking at all of these. So once price comes and taps these areas, it will at least make a decision, on where it wants to go. If it wants to continue to break up, let's say price gets to this point, if it wants to break up, right, it'll start doing this, and it'll come back before going up, because that's market structure. If it wants to come down, right, it'll tap here, right, or it'll make like structure, right, it'll do this, and then it'll start breaking the lows, grab liquidity at around these areas, breaking the highs, and then start coming down. So these are the two kind of areas to look at for these are two kind of scenarios to look at in terms of price action. This is the weekly candle. Okay, so let's drop down to the daily. Obviously, this is where things will get more detailed and interesting. So daily closed bullish, I would say, respecting 1926, right? And I'm looking very specifically at these areas, right? So you closed respecting there, right? You had some level of support here, right? This was messy a little bit, but you had some levels of support here as well. Yeah, so I would say in general, this is a very strong area that price is respecting on the daily chart, right? On top of that, the previous daily basically had no bottom wick, right? So at any given point, if price wants to go up, it doesn't have enough liquidity, because if you look at this area here, every time price wanted to drive up, it needed to grab liquidity from these areas before driving up. If price wants to drive down, right, it will come, because obviously this push here, this liquidity grab here was enough for a push to go down to these levels, right? But obviously it wasn't enough to come all the way back down, because it's rejecting, right? You don't have that structure being formed. So what are we expecting if price wants to go down? It still needs to grab liquidity to go up. So in terms of the order of things that will happen, it's likely that we'll get buys first to go up to about 1948 before getting our sells to come down. So I'm looking for buys to around these sorts of areas, right? These top wick areas, and then for price to flip, because that's what price printed last time it was here, right? Filled the ranges around these areas. I would say your top of the range on the daily, right? This is the daily chart, is here, is around 1933. If we can come up to here, 1933, while respecting this on the daily chart, it's very likely that if anything, price will come and do this, right? It will likely bounce. That's scenario one. Oh, sorry. Let me redraw this. So, okay. So if these are scenarios that could happen. So if price just pushes up from here, it's likely that it will bounce, right? And we'll take this trade here. If it doesn't, right? Let's say price, doesn't, and then it starts breaking down, right? It will need liquidity, right? It will need liquidity before coming down. In that case, right, we don't know where liquidity will be grabbed, right? It could be, just the break of these highs here to grab liquidity to go down, or it could be even higher to go down, right? We don't know. But as market structure prints and price, is reacting at certain levels, right, we'll be able to tell a lot more about like where price is likely to react. Because, for example, right, if price starts breaking below these sorts of areas, right, it's like, oh, okay, let me redraw this. So let's say price does a mirror of this, so price comes, from this point, starts driving down, making lower lows and lower lows, and it's breaking this area. Where are we expecting this liquidity to be grabbed? Just look at this, right? You're looking at this, the last time price broke these areas, right, started driving down to these areas, what did it tap? It tapped around 1917 all the way to 1921. On the 4 hour, on the 1 hour, you'll be able to see a lot clearer where price is likely to tap in that range, the top of the range there, and that's going to be where we're expecting our sells from. So if price does print this bearish structure, we'll still have sells, but it will be at different levels, and it will be according to what price prints at that time. So if we go back to the daily, right, obviously we're mirroring this kind of structure, hopefully. Well, it looks like we're in this range, so it's likely that's going to fill the range, break out, and whatever. So we'll just play it accordingly. And currently we're interested in some sort of action or rejections at these areas. So I would say I'm going to keep this box here, all right? Because we're looking at this sort of area, because we're in this range, right, on the daily. So if we were to tap, 1933 first, I'll be very happy to take a buy. But if price starts coming down, creates that bottom wick, right, creates it, and then it comes down all the way to 19, or these sorts of areas here, right, where it grabbed liquidity, and then it starts coming back up to 33. Obviously that's a stretch, right? But if you look at the daily chart and the smaller kind of a zoomed out sort of view, if price does that, then it's likely that it's not going to continue pushing down, right? It's likely that it's grabbed enough liquidity to retest the highs around 1981. So in terms of order of things, if price doesn't break this daily low, or if price doesn't have a bit bottom wick for this candle as well, I'll be taking sells about 33. And once that happens, cool, I'll probably get buys at around 1903 areas, potentially 1893 areas for that kind of retest of the lows and some sort of rejection there. So that's what I'm interested in terms of the daily. So let's drop down to the 4 and look at where we're ranging on the 4. All right, so I would say in general our kind of range is from around, let's just mark up some ranges, right? Let's mark up some ranges. So we're in a range, pretty happy with this in terms of a range. Yeah, so currently I would say price is between 1928 and 1914, right? So within this range, price can do a lot of things. It can fill the range, it can break out of the range, right? Or it could do fake outs and stuff like that. So what are we anticipating here? What we just mentioned, we're looking for buys, we're looking for sells around these areas, right? Around 1933, 1935 sorts of areas to start retesting the lows, because that's what makes sense, right? In terms of the daily, right? Daily needs a bottom wick. It needs to start driving up to fill that monthly top wick, to create that monthly top wick, right? And the weekly is also bullish at the moment, but we're needing that top wick before coming down. So everything's aligned at the moment, right? So the 4 hour, if we get these buys to come to about 1935, we're taking that short term, maybe half an hour, 15 minutes sort of trade, which is going to be that rejection at these levels, to come down to fill small ranges, right? Obviously we can't play the daily and weekly ranges because that's just swing trading, right? And we're scalping. So we're looking for the reaction of price at these levels, at 1928, 1914, 1935, and potentially even slightly lower at around 1904, maybe 1903 areas, I would say. Around these areas, right? So let's see, so last time we were in this range, what did price do? And we're looking at this, right? We're looking at this, and also where we highlighted previously, we're looking at these areas, right? Obviously, let's identify the short-term bias that we have, right? We are bearish, coming back after a fake out into these ranges, right? So we've broken through, I would say, what is a range 1, right? We're in a second range now, in a kind of bearish momentum, and I would say that means we're looking at these pushes here, right? It's less specifically in these areas. We're looking for this. We're looking for it to create lower lows. So in terms of price respecting 1914, maybe around kind of 1913 areas last time, it grabbed liquidity at around 35. It grabbed liquidity once here, grabbed liquidity again around 33, the two areas we just identified, and then it started driving down to retest the lows at around 1893. So that's what we're looking for price to do as well. So if it's respecting here, right, it's grabbing liquidity, creating that higher low before creating that lower low. So if we go back to here, this level also matches, right? We're at around 1913.36, I would say. Let me move that a little bit higher. So if we're in this range, right, last time price tapped around 1930, and we got some nice rejections coming down to about 1909, right? But you can see once you rejected about 1930, you didn't come down all the way to 1893, right? Because you didn't have enough liquidity to come down. There's multiple ways you can come down, right? You can do this. So say price is in this range here. If we want price to come down to 1903, sure, maybe you can just grab this, start coming down. All right. If you want it to come down to all the way to these areas here, right? Let's actually find that level. I would say probably go on to the 1 hour for this. Right, we're looking at, say, around here actually. Yeah, so around 1893, right? So we're looking for price to fill that range once it starts breaking into it. But to get there, right, and obviously you respect it here, right? There's a strong respecting here, and then you started pushing all the way up. But you didn't create that higher high. You're still respecting this, and this on the weekly, you're still respecting this, right? You still haven't broken those highs on a closure. So price could either grab liquidity at about 30, start driving to 1903, but I wouldn't expect it to come all the way down to 1893. If price wants to come down, I'm expecting this, right? I'm expecting higher high in the short term, right? Higher low, grabbing liquidity at around 1935, these areas, to start, retesting the lows, and then it will start doing this, right? And it will start doing this. And then once it does that, if it wants to start reversing, it might do something like this, right? And it always grabs liquidity before going anywhere. And this is just market structure as a whole. But yeah, so now let's talk about more specific items, which are, where we're looking for our buys and sells for, I would say, for Monday. Asian, I'm not too sure what's going to be happening in Asian. Obviously, this is 11 p.m. in London. Markets are not really open at the moment. I think it's still another 2 hours or 1 hour before it's actually open, and then like 2 hours before it's actually got some volume in. But in terms of sells, right, because price is now kind of respecting, I would say, these sorts of areas here, right? If it's respecting these areas, but it's looking like it's going to break below, similar to what happened very specifically here, right? If price breaks below on a 4-hour candle, the next 4-hour candle, right? If it breaks below, and then it comes and grabs liquidity around here, cool, I'll get in sells. And I'll get in sells because, right, we're understanding that the general bias is bearish, right, in the short term. So we'll get those sells around here. We'll only look to tap, small ranges like 30, 40 pips, right? But we'll get that, and then we'll wait, right? We'll have runners potentially to 1913 or maybe 1916 sorts of areas, but we'll at least be stops to break even around these areas. And then if price, is starting to break this structure, start coming up, right, similar to what happened here, then I'll wait for some sells at some other areas, right? Last time price broke up above these ranges, we're looking at these areas here, right? Once we're breaking above, or potentially even here, right, we're kind of breaking above, then where are we looking for sells? Then we're looking for sells at around these areas, potentially at 1933. The range is around 1932 here, so we could potentially get sells at 1932 as well in terms of the short term. But again, you have to understand that the sells around these areas would be short term, right? You're not holding these to all the way down to 1913. You're being aggressive with them because you understand that if price is breaking into this range here, it's very likely there's multiple things that can happen, right? It could be that price is going to reject from here, start coming down, or it could respect and then start driving up. Regardless, this will happen, right? This will happen. It will need to grab some sort of liquidity or create some market structure, print a higher low before creating a higher high. So we're just looking to play this little bit of the market. So that's, I would say, depending on the situation, is either sells. I would say currently I would have a sell here, 1932 point, and you're looking like as we were mentioning just now, right? You're looking for small ranges to be captured, right? So if you zoom into this in your own time in like the 30, 15, or even the hourly, you'll see that this is a range in between here, right? Price broke below, it came down, rejected from here, and then it started ranging in the 5 probably before going up. So these are all ranges. This entire thing is a range. So we're looking for it to fill the range, come back to the bottom of the range before going up, and that's market structure. So those are my sells, right? And then if we go back to overall, what is price doing in terms of the daily and the weekly, right? We're expecting that bottom wick somewhere. So after we get ourselves potentially at about 32, you know, I would probably have a pineapple. Let's see where I would have a pineapple. Probably slightly higher at around these areas here, right? I'll probably have a pineapple about 37, right? Just because, you know, this is the very top of this range here now, right? You're looking at this, you're looking at this, confirming that there's some, you know, reaction here in price. This as well, right? There's a bit of a fake out going on here, right? You have some respecting some fake out filling the range, going back up, right? Another fake out filling the range. So, you know, this is also, I would say, you know, like around these areas, I would say maybe 37 point, yeah, around here. Maybe here, just because if you don't get this exact wick entry, you might feel sad about yourself, but yeah. I would say that's probably your pineapple. I appreciate it's 50 pips away, right? But that also means that you have a better advantage point. If price really wants to drive up, you could probably exit at about break even in the middle at 1934. So if we go back to the daily, once we get this price, these cells at this kind of price, right? Let's say price does this, right? What does price do after that, right? It's grab liquidity, but like it doesn't have any liquidity to go up. This daily has no bottom wick, right? That we just analyzed just now. If price just starts breaking up now, right, and there's no kind of bottom wick for this candle, there's no bottom wick for 2 daily candles. When was the last time you saw that, right? Last time you saw no bottom wicks for 2 daily candles, right? It was either a bearish no bottom wick than a bullish no bottom wick, but no, like I don't think I've ever seen 2 daily candles with 2 no bottom wicks on 2 consecutive candles in the same direction. So it's very likely that price will come down to create that bottom wick for this and also create a bottom wick for this candle. So because of that, right, we're looking for sells probably just to capture, I would say, max around 1928, 1924 sorts of areas. Once you break this daily, you don't know if it's going to come down. It could just create this daily and start driving up again, because once you're in these areas, then you're creating that lower, that higher low before creating that higher high for bullish market structure, right? But if you're starting to come down and you kind of start tapping into these areas, I would say once you tap 37, 32 and 37 and you've rejected off there, clear rejection, right? Then I would start looking for buys at about 1913. Why? Because last time price came into like 1932, 1937, right? Came into these areas. What did price do afterwards, right? It came into these areas, it rejected in these areas, right? It rejected, and then you could have gotten buys around here. You know, you had some multiple rejections here, all the way to around here as well, right? And here. So if price taps 1913, there's a high chance it will reject off this area and you can catch some level of, you know, 10, 20 pips, right? So if price, this is very dependent on market structure, right? If price taps these areas, cool, I'll have a buy here. If price just starts driving straight down, right, on this daily candle and starts creating that bottom wick without, you know, because it's already created, and on the daily, right, you're respecting generally 1926, right? That's what we mentioned today. Generally, you're respecting this area here, right? So if it is, price could just start rejecting and go straight down, right? After a tiny top wick, you know, you might not get an entry at about 30, right? And it could just start coming down. So if that happens, I won't have a buy at around 1913, and instead I'll be looking for buys at around 1903. For that first rejection, I would be looking for a strong wick into 1903, and then I'll be taking potentially 10, 20 pips on that rebound before it starts driving down to 1893. If it starts, you know, bouncing at 1903 and you see some structure being formed, you know, so the zucchini or whatever, then potentially I'll take a buy on the second time it taps into 1903, maybe when it wicks into like 1900s, 1901, for it to come back up. But if price doesn't do that and it starts creating lower lows, lower lows and lower highs, then I'll look for buys around 1983, and I'll probably have stops probably around 1883. That's perfect stops, by the way. That's about 100 pips. So that's exactly what I'll be looking for. So I'll say currently because if you look at this, right, you'll see that you'll have sells around here. Buys around 1913 only makes sense if you tap here, but if you don't, I'll have buys around here. And then if anything, I'll have buys around here as well, depending on what happens in this area, right? But we're expecting, in terms of the order of things, we're expecting the sells to happen first and then the buys to happen. So yeah, that's the analysis for today. And then now I'm going to have about 10-15 minutes just for questions. If any of you are on the DVS Discord and you're on the Signal voice chat, feel free to drop some questions in there, or just start typing questions. I appreciate there's a bit of a delay on YouTube versus in my streams, so if you just start typing questions now, I can start reading them, and then I'll be able to answer your questions. The more specific you can make your questions, the better it is for me to answer them. So like ideally you've done some level of analysis yourself and you're coming to the charts asking why certain things wouldn't play out, or like would your kind of thought process of the markets make sense and stuff like that. So yeah. Cool. Yeah, now we're open to questions now. Breakdown took about 28 minutes, 29 minutes. That's pretty ideal. Yeah, and again, anybody who wants to join Signal voice chat, just ask questions. Feel free. If not, yeah, thank you very much for tuning in. Yeah, we'll be doing this again tomorrow night and the night after, and hopefully every single day, unless there's... I'll probably start scheduling the streams 1 day in advance, so probably like 24 hours. I'll schedule the next stream after this stream, so you guys can kind of have that time ready as well. Can we look for sells confirmation on 30 minutes near to 1928? Cool. So obviously what I just broke down is a higher time frame analysis, right? And you can be looking for 5-minute plays. You can be looking to capture 10 pips on the 5-minute, right? So it's very valid that you're asking that question, right? If we're looking at the 30-minute chart, cool. Let's have a look at what price is doing in the ranges for 30 minutes, right? In this 30-minute chart. So I would say this level still stands, 1928, right? I would say you're also in a range around here, right? Between 1920, 24.5. Yeah, cheers, Jen. Cheers. Yeah. I'll catch you tomorrow, mate. So I think if you're in a range between 1924 and 1928, it's a high chance that you could look for sells at around 1930, right, or near kind of 1928 levels. You could be looking to mirror these sorts of things here, right? But you have to understand that when price pushed up last time, it pushed up from here. Cool. We also pushed up from these areas. Amazing. It's already tapped 1928 once. It's tapped 1928 2 times already, right? And it hasn't indicated that it wants to go up, right? It's just in this range, right? Obviously, we haven't been here for a very, very long time, but it means that if price, starts, pushing up, but it's not creating those higher highs. Once price starts breaking below, let's say price does this, and then you kind of have the structure coming below, right? And then you're in this range, maybe between 1924 and 1922, right? You're in this range here, and you're filling this range. Once you kind of come back up, grabbing liquidity, I'll look for sells at around these areas. I don't know where this area will be, right? I'm just looking at what price did last time. So you're in this area, right? You grab liquidity up here. Cool. We could have gotten sells here because you were respecting this area, right? But if you didn't, you were looking for the break of this and then liquidity to get grabbed. So you could be looking for sells at around these areas as well, right? If you're getting sells at around these areas, you would need this break below 1924 to indicate that you're coming down in terms of structure. So I think 1928 sells are slightly dangerous. You'll likely see some level of rejection. That can happen, right? But it's a slightly high risk because price has already tapped that area multiple times. And if it does tap it again, you know, it could just break it, right? You don't know what's going to happen. You know, you're in this range, you've created equal highs and equal lows, right? And generally, in terms of the 30-minute chart, your short-term 30-minute chart looks to be bullish. So it's a high chance that we're coming up. That's why we're looking for sales to come down, right? So if you're taking a sell at 1928, I would be careful. I'd be quite aggressive with it, right? I don't think you will likely get a full rejection down to 1926 again. You might get like a small rejection and you might start popping back up because you're struggling. You're struggling to break down. You're struggling to break up. You don't know what you're doing, but generally price is bullish, right? So at any given point, it can start breaking up. But yeah, that's what I would say for the sells in 1928. It's just like every single trade you want to take should be confirmed to some level, right? You should have some level of confirmation that price has given you, and then you're like, oh, okay, so price has done this in the past, it's likely to tap this range, because gold is very technical, right? Gold tends to fill ranges, and gold tends to, you know, like push from ranges into other ranges, fill that range, and then come to the top of the range, bottom of the range, and then like kind of consolidating for a bit before going anywhere. So yeah, so I would say if you do push up above 1928 and then you're in a sell, right? Say you're in a sell here and price, you know, starts doing this, right? If it comes up all the way to here, I'd likely exit at break even if you can. I wouldn't look to hold this to come down just because there's no indication that it wants to come down, besides the fact that, you know, the daily has no bottom wick, but we don't understand where that top wick for the daily will be, right? If we're looking at the daily chart and we're looking at where the top wick for the daily will be, right? We're looking into these areas, right? So are you going to hold a trade from 1928 all the way to 1934? That's 60 pips, right? Potentially even higher, like 70 pips. And that's just drawdown that you might not even come back into. Like, you could be pushing like this, right? Price could just do that, right? If there's news or something, price could just, it'll have a catalyst to move in a certain direction. So there is a chance that price won't come back. Everything I've said is just probability based, right? It could happen. I'm saying that there's a higher chance it will happen based on what price did previously, but it doesn't have to happen. So yeah, I would be careful for 1928. Do we got any other questions? And I'll unmute myself. Yeah. Do we have any questions in the Signal Voice channel or anywhere as well? Yo, Jacob.
Yo, I'm good right now, bro. I just got back to my crib, so I'm gonna do my analysis right now, but I'm looking over yours, comparing it to mine.
No worries, man. Yeah. I would recommend everybody to do your own analysis, right? Because once you have your own analysis, you can understand what you're looking for and then compare it. And then you can think about, because I could be wrong, right? There's no guarantee that I'm right. So once you do your analysis, you know what you're looking for, and then you're comparing what you understand to what I think I understand. And if some of those match up, then you have slightly more confirmation that this could be the right thing, right? But if they don't match up, then it's like, who's right? You don't know. And then you just watch price play out. And then you can have a better idea after you kind of figure out what price did at those kind of areas. Dr. Math, can we look for buys targeting 1932, 1937? Yeah, okay, let's look at that. So if price does start coming down, I think it's difficult because your general structure for price is very bearish. You also grab liquidity at these areas, right? If you're looking for buys to tap into these areas, right, 1932, 37, there is a high chance that it won't reach those areas. We're just saying that if you get to those areas, there's a high chance that you'll get a rejection there because there's no reason. Like in general, right, we're looking for sells. We're looking for sells to come down to create these daily bottom wicks, right? So if we're looking for sells to come down, right, then taking a buy at, you know, let's say you take a buy here, all right, price, actually let's go down to the 4 hour. Let's say price kind of ranges in between here and then it comes down, right? You know, and then you get a buy around these areas. Cool. But like if you look at this in terms of price action, right? What is the indication that price doesn't want to continue driving down, right? You've just created this fake out. You've grabbed this liquidity, right? Last time you grabbed this liquidity as well, right? You just started filling the range down to 1903, and then you created, top wicks. The highest top wicks you got were around 1928, right? So if you've already come down to around 1916, you've created that top wick at around 1928, 1929. It could just drive to 1903. So you could be in a situation where you just hit, right, and then you're suddenly what is this? You're suddenly 150 pips in drawdown, or say you take a buy at around 1913. What does that look like on the daily, right? Maybe you're taking a buy, for some level of rejection here. I would say this is probably a slightly stronger area, 1913. If you're taking a buy here, I would still be careful, because at that point the daily would have created some level of top wick and started driving down, right? And you're creating that bottom wick for this. So it could just start driving. But if price does something similar to, let me just highlight the right areas. So it's gonna get rid of a lot of these boxes. So if price does something similar to this, right, where it comes down to 1913. What happened when it came down to 1913, right? It also tapped around 1937 areas, right? And it also tapped around 1932 areas afterwards before driving down. So you could look for buys around here, slightly risky, because at any given point, price has grabbed that liquidity and it could come straight down. But yeah, I would say it's just high risk. And if it makes sense for you and you trade that way, go for it. I mean, I'd love to see what price does on Monday and Tuesday. If it does create that bottom wick and then it rejects out of 1913, then cool, that's another data point for us to learn from. But at the moment for me, I would say my buys are around slightly lower until you get price tapping around 1937 or 1932. If price does this, taps 19, let's say price does this, right? Range is here and then it taps. I'll look for sells to come down, and then I'll look for some rejections here, potentially some rejections here, and then at that point I'll realize, okay, cool, you'll probably have some rejections here. Why? Because you're looking at market structure, right? You're looking at this coming up, coming down, creating a lower high before coming down to create this kind of structure. All right, this is just kind of price making a decision, and this is direction, and this is the volume and liquidity that's being grabbed. So if that happens, cool, I'll look for buys around here and here just to get that small rejection there. But if you're looking for a straight buy when price just comes in and taps, it would be risky, because say price just does this. I mean, do you know where you're looking for buys? Like, I think if you can let me know where you're looking for buys as well, or maybe you don't have any buys at the moment, but let's say price does this, right, and starts driving down. If you look at the daily, right, and we just have this one line here, what do you see? You can see, if you know the playbook, right, you can see accelerate, right? If price starts creating that high, breaks these highs, comes down, cool, we'll have the celery and we'll be in terms of like a daily celery. But we also appreciate that because we're closing respecting and we have no bottom wick, we could just come straight down. So if price does that, there's nothing stopping it, right? So I would be slightly worried. Yeah, that's just what I think. Cool. All right, you guys have 5 minutes or 3.5 for any more questions if you want any. If you want anything answered. If not, hopefully you guys are subscribed to Wix's table. If you aren't, go check Wix out. And then, yeah, he does a breakdown every day as well. Don does a breakdown in New York. Wix does Asia, and Janez does London. So, DVS has everyone covered in terms of every single session. So look out for the breakdown, understand what's going on in the markets, understand your thinking, and understand what they're thinking or what they're trying to catch, and then find that. Yeah, no worries, Johnny. Yeah, just emphasizing that none of this that I've just done is knowledge that is being generated that's new, right? All of this is DonVo, Wix 9, and the motion, right? Like all of this is existing knowledge. I'm also somebody who's just learning, right? And because of that, I will also get things wrong. So this is just an area for, I would say, discussion, but also in general, me trying to learn about this, kind of like doing the breakdowns every day so that I can learn about them as well and learn about what makes sense to me. And obviously, I've been trying to trade the motion strategy for slightly longer than some of the people who are just joining DVS, so it's a good starting point to ask questions and stuff. Yeah, Yusuf, go for it. What is your question about wick fills? This is why, like, you guys need to write your entire question out because there's a 20-second delay, brother. Yeah, let me know what you want to ask in terms of wick fills. I'll be taking 2 final questions. So Yusuf has one of them. Hey, cheers, Jack. Thanks for tuning in, man. Jack, we have a meeting next week. That's the new trading journal. So be on the lookout for that. But yeah, 2 questions left. Yusuf, please elaborate on your question before I'm able to answer on it. Or if it's a very general, just what is a wick fill, then type that out as well. This delay is killing me, man. We peaked all-time viewers at 27 today. Look at that. That's incredible. Yeah, so if anybody hasn't, subscribed to It's DonVo on Instagram, please do so and start, tuning in to live streams for New York as well. Yeah, Jack, it should be a good meeting, man. There's a lot to go through. Yeah, Johnny, I don't know where Yusuf's gone. Oh, he's back. When people use different time frames like 30 and 1 hour, they find what they're looking for, example, buys or sells. Sometimes use a 5-minute chart to see whether candles close bearish or bullish. Huh. Hey, yo, Kieran, how do I make you a mod, brother? I don't understand. I'll sort that out. Oh! I think I found it. Kieran, give it a go now. Alright, so I guess let's just... okay, I see what you mean in terms of a wick fill, right? Okay, let's go through this. This is a good concept to understand. So let's draw out some stuff here. And what's the easiest way to do this? Hey, Kieran. So let's say I'm gonna bring out Paint. Paint is a powerful tool, right? Don't underestimate Paint. So let's say I'm gonna draw some candles, right? So let's say we have, okay, that's fucking huge. Let's say we have some sort of bearish structure. Actually, let's do this. Let's say I'm not going to fill these in, but I'm just going to have this. So let's say price is like this. So you have a bearish candle like this, right? And then you have another bearish candle that's about to open up. Let's actually make this a longer. Jesus. Okay, let's just do that. Right, so let's say you have this massive wick here, right? So in general, you can see that the hourly candle, say this is the 1 hour, right? If this is the 1 hour candle, right, that is comprised of multiple 15-minute candles, loads of 5-minute candles, right? So in the middle of this one hour candle, you could have a range between here and here. You could have a range between, you know, like potentially these areas here. You could have another range below and kind of into these areas here. Like you can have ranges within this 1 hour candle on the 5-minute, right? So what does this mean, right? So in terms of the candle opening, which is here, right? So what did price do when it does that, right? Let's I'm gonna use a pen. Okay, so if price opened up here, right? If price opened up here and then it closed here, bottom here, top here, right? Price at some point either did this, came up, down, and this, right? So start, top, bottom, close, right? Either did this or it did this, right? Did this, right? So start, bottom, top, close, or price did this and then like a bunch of shit in the middle and then it just closed like that, right? There's only 3 kind of scenarios, or like multiple scenarios, but you can get really messy in these kind of areas. So I would say the highest chance you would see is this, right? This is probably your highest scenario output. And when you're looking at this, what does this look like in terms of 4 15-minute candles, right? So let's draw this out in 15-minute candles, right? We're looking at this. So we're looking at opening, right? Would it come up, right? So actually this is a bullish candle for the 15. So let's do this, right? We're bullish, right? Created that bullish structure there, right? And then you have a bearish candle, right? Right? Could have another bearish candle coming down, creating that bottom of the range, right? And then you have a bullish candle right here. Oh, fuck me. Jesus. Yeah, but something like this, right? So if you have this in terms of structure, right? If this is structure, you can see here that we're very bearish, right? And an hourly bearish candle indicates that in the short term, we're also bearish in terms of a bias. So if you break this down on 15, this is likely what it looks like if it's following this. This is the most likely scenario that's happening, right? You have your opening, you have your top, you have your bottom, and you have your close. In this scenario, what if we're in a bearish market structure, it's likely that price is going to create lower lows and lower highs, right? And in that case, if you're expecting, what are you expecting after this, right? If price is doing this, you're expecting this to push down, come up, push down, right? So your next candle is going to be these areas, right? Open, right? Open and your top potentially, right? Your bottom here, and then you have some sort of ranges in between, right? So what like let's draw this out when it kind of comes to it, right? So when you're here, you could create another top wick, likely. There's multiple scenarios that can happen, but let's say price comes, creates that top wick, right? Starts rejecting off these sorts of areas. And then we have a bearish, right? A bearish candle like this, right? And then you have a break of this low because you're in a bearish structure, right? And then once you have that, potentially you'll come and create lower lows and they'll continue to break down, or you can create a little bit of structure here, and let's say price does this. So this is just your next hourly candle, right? So this is, these first 4 candles are your first hourly candle, and these 4 are your next hourly candle. And what does this look like in terms of price, right? Price opened up, created a high, came down, closed here. So that's your next hourly candle. That's it, right? So this is what we mean in terms of a wick fill. This is the wick here. All right, let's highlight this. So this is the wick here that you're trying to fill. And if you're looking for it to fill, you're just looking for price to at least come back to these levels, retest those before making a decision. Because at any given point, right, price could start pushing up, but if it is going to push up, you will need to retest the lows or grab liquidity, right? So in this case, if price wants to grab, if this is a liquidity grab, you'll see price do this, right? You'll see price come back up, and then you start breaking above. But you still grab liquidity down here. If you don't see that, and you start breaking down, you might get a candle like this to push up, right? For the first 2 candles, and you're grabbing liquidity as well. This could be liquidity grab, and then, oh, guess what? Fuck me, right? You're in sells, right? And then you're coming all the way down because you're still bearish. So yeah, I would say I need to find a better way to do this in terms of like on a Zoom call or like ways to draw candles. But yeah, think of always refer back to candles as like, you know, where it's opening, where it's closing, and structure. So if you're in bearish structure, looking for it to fill wicks. Filling a wick is just basically coming down, retesting the lows, and continuing the structure. Right? You're likely to continue to structure, which means that you'll fill the wick and likely break the wick. If you're looking to reverse, you're likely to either tap the same kind of levels, breaking the wick, or you know, matching the same wick and then start driving up, and you know, then we'll have a market structure change. But for a market structure change, you still need this, right? So if you're coming down, right, and you're coming down, you want to change structure. You still need to potentially come up to these levels, not break the high, come back up, right? Then you start creating bullish structure, and that's your market structure change, right? And a lot of the times what we'll see is not actually these levels being respected completely, and a lot of times it'll be this, right? So it'll come down, you know, we'll come down, we'll grab this, and then we'll get this, right? Or it'll be like this. So does this, doesn't create a lower low, comes up, creates a higher high, breaks this in terms of like a wick, and then go up, right? And this is the liquidity grab we've been trading recently. But yeah, right, I think that's the last question for the day, unfortunately. But yeah, we'll be back tomorrow, so any questions, save yourself, save for tomorrow. Write them down or whatever. You can ask me anytime. So, but yeah, thank you very much for tuning in, and I'm gonna end it here. So yeah, we'll likely see you guys tomorrow, if anything. Have a good day trading, and we'll see you tomorrow. Thank you very much.